to the first Small Business Breakthroughs of 2023. We're excited to have everybody here, and I think we're going to have a great session today, and it'll be the first of many this year. So my name is Mike Bowers. I'm the director of the Ohio Small Business Development Center at Columbus State Community College. And the Small Business Breakthrough is a session that we do where we bring in experts to talk to issues that are impacting small business owners. And I think today we have a great session planned for you with Michelle Roseberry of HBK CPAs and Consultants. This session is put on in partnership with the Dublin Entrepreneurial Center, and I am actually sitting in the boardroom for the deck. And I want to bring in, as usual, Chaz Frutel to kind of talk about the deck and some things that small business owners can benefit from as part of the Dublin Entrepreneurial Center community. Chaz?
Well, thank you so much, Mike, and I apologize for the background noise. Having some construction done at our house, so you're going to hear some banging and whatnot. Hopefully, it's not too bad, but I'll be quick. But it's always a pleasure to be partnering with Small Business Development Center at Columbus State. Has been a partner of the Dublin Entrepreneurial Center since we started in 2009, and just very excited to continue this type of programming with them here in a new year in 2023. So very exciting. Mike's been a great partner, and all the members of his team have just done a fantastic job helping the businesses that call the deck home. We've got 120 plus businesses at the deck right now. We do have some office spaces, some cubicle spaces, some hotspot space available right now in this new year. January is a heavy month. We always get 10 plus new tenants and maybe giving out 12 plus new offices always at the beginning of the year, but we do still have some space available. So anybody that might be interested, love to have talk with you, and I'll put my contact information in the chat. But we're excited to be in a 13-14 new year of the Dublin Entrepreneurial Center, and just proud the fact we've graduated over 180 businesses from the deck, and also the fact that over 90% of those businesses that have graduated are still in business today, which is an outstanding statistic in comparison to the national average. So excited about all that. Just excited to hear Michelle and what exciting things we can hear about accounting and taxes and things like that today. So I'll quickly get my mic off so don't hear all this background noise. But thank you, Mike.
Sure thing. Thanks, Chaz. As I said, I'm in the boardroom. I'm not going to turn the camera around because I've got it set up. But Susie Gillian is in one of the vacant offices, which again, there's not that many. So we have, you can see the view. She's giving you the tour of the office. Like I said, there's a number of different options here that you can take advantage of, and not only have the space, but you can also be a part of the community. Because I think we've talked about this numerous times on the Small Business Breakthroughs, the value of the network and the community that you can be part of here at the deck. So if you're interested, reach out to Chaz. I know Bruce put the URL for the deck in the chat, and feel free to connect that way. Also, as it relates to the chat, if you have questions, go ahead and put those in the chat, and we will endeavor to have our guest address those. And speaking of our guest, we'll go ahead and bring Michelle on now. So Michelle Roseberry, who, like I said, is the principal in charge of the Columbus office for HBK CPAs and Consultants. HBK is a partner of the deck and is available to provide some level of support for individuals through this, and obviously has been engaged with the deck for a number of years. I remember, I think I met Michelle probably 2018, 19, But then there's this gap of the COVID time where everything just kind of stood still. And then I reached out to her last month, and it was great to reconnect, and I'm looking forward to today. So I do want to warn you, Michelle, that Chaz is probably going to be wanting some free CPA advice here. So he's got a number of questions relating to some of his business ventures. So just be prepared. But why don't we go ahead and get started? Michelle, you want to kind of introduce yourself, tell us a little bit about you, tell us a bit about the firm, and we'll jump in from there.
Certainly. Thank you, Michael. And thank you to the DEC and the Ohio Small Business Development Center for asking me to be involved in this. It's a privilege. I love helping and working with startups and developed companies. I've been in this business for over 20 years. HBK is a multidisciplinary firm offering services in tax, accounting, audit, business advisory, valuation, financial planning, wealth management, and support services in Pennsylvania, Ohio, New York, New Jersey, and Florida. And the reason we have all those services is the premise behind HBK from the founders back in the 1950s was we want to service whatever keeps business owners up at night about their companies and how they're operating. We want to be able to take care of them, their businesses. So that's why we have so many different lines of service that we can provide outside of the compliance with the tax and the accounting.
Well, that's great. That's great. And I think it's interesting that you say that. And I think it's a great start for where we are, because I think for a lot of small business owners, there sometimes is confusion of what they need to be doing with the CPA and what services they can provide. They do know that there obviously is tax services and things of that nature, but they don't understand the gamut of everything that's going on, such that they don't take advantage of it. And I think that does create a void in their business, because I think that having a good financial partner is important. And we've talked about using, building this kind of partnership network around you. And when we talk about that, it's not necessarily employees, and it's not necessarily people that own part of the business, but again, it's this partnership. So, having good CPA, having attorneys, insurance, all of these things can make your business really successful. So let's kind of jump in from there. So as a small business owner, so a lot of the folks that partake of this session, they are been in business for a bit. Some of them are earlier stage. Periodically, some of them are just getting off the ground. But Michelle, can you kind of talk about kind of the role of a CPA? We talked about some of the services, but talk about the role of a CPA that a business owner should be looking for and taking advantage of.
Right. You want to work with a CPA or an accounting firm that wants to be a partner with you in your services. You really spoke about it, Mike, on the partnership, because your CPA should be a resource to you, not just a compliance work for the tax and the accounting. CPAs are able to help you understand the tax law changes. They're able to connect you. If it's something you're looking for, as an example would be lending. A lot of times accountants have not relationships, but know a lot of bankers. And so we're able to connect you with one that we would trust. We can give you advice on proper formation. That's a big thing on businesses when they first start up, is are they forming as the proper entity type? C versus S, partnership versus LLC, how those all work together and what are the differences between them. So we're able to do that. And the other thing is too, that we can give you advice on analyzing your business. let's say you have multiple lines of services you provide, then we've had enough experience. We know what to look for on the financials to be able to say, this is profitable, this is not, and also give you advice on how to, what costs should you be analyzing? What should you be evaluating to make sure that your business is operating efficiently and effectively?
Yeah. So, to those points, how often would you think it's good for an owner to engage with their CPA? Obviously, if there's issues or taxes or something like that, that's one thing. But I mean, to provide, to get that kind of guidance, I guess, I mean, what are your thoughts? Because I think a lot of people, maybe they don't touch their CPA except for once a year or something like that.
Right. And once a year, honestly, is not enough unless you're just towards the end of the business and just want to get the work done. Although even towards the end of the business, wrapping up a business is also not once a year talk. But we recommend, if you're in a growth mode, we recommend quarterly. And the way we operate, and I think a lot of CPAs do, is we're here to answer your questions. And if it's something that we have to research that we don't just know off the top of our heads, then we will let you know if there's going to be a charge. But a lot of times clients will call me and ask a question, and maybe it's because I've been around long enough, but most of the time I'm able to answer it just from my previous experience and knowledge. But we recommend quarterly, or if you have a big change in your business. Now, we have some clients that like to only work with us or meet with us semi-annually to evaluate where they are and go over the business.
So how should somebody be looking at it? So, clearly, I mean, to be clear, I don't know if you guys provide this, but I mean, to be clear, bookkeeping services and CPA services are not the same thing.
Right.
So, and I think sometimes people get wrapped up into one, either bookkeeping services or just QuickBooks, and hey, I've done that and I'm good to go.
Mm-hmm.
Versus, really getting somebody that maybe those are all put together perfectly. They can look at that and
Mm-hmm.
be able to assess, how this is impacting their business. What do you think individuals should be doing to prepare to have interactions with their CPA around the fiscal strength of their business, not just the tax part? And you can comment on the tax part too, but I mean, what should they be doing to kind of prep and look, and where should they be looking in preparation for those conversations?
I always recommend some type of accounting software, and the most prevalent is QuickBooks because it's pretty user-friendly and easy to use. But we still have some business owners that we do tax work for that say, I know what I have because I see my checkbook. But you really need a little more than that, because you may have money in the bank, but do you know exactly where it's all going? So we always recommend some type of basic accounting software to start. Like I said, QuickBooks is easy. I'm not selling QuickBooks, but it's user-friendly and pretty widely known, easy to use. But when you're first meeting with an accountant, you want to bring, if you don't have QuickBooks, at least a summary. We have some clients that have very simple businesses and they just track it in Excel. So that works as well. But just something that we can look at with you or together to go over the activities of your business. That would be one. And then whatever your goals are for the business, because we can help you look towards what tools you need or resources you need to reach those goals.
So in the time you've been doing this, I mean, have you ever had anybody just bring the receipts in the shoebox?
I have, absolutely. The thing about that is it's actually costs you more because it takes us more time. So if you can even just summarize it in Excel, that's enough for us. When you bring in a shoebox, I could tell you my nightmare stories on the whole shoebox. because companies thought they were making money. And then we take the shoebox and summarize everything, and they're not. So it's better to work out of something other than a shoebox of receipts.
Yeah, and that's a good point. Chaz, make sure that you kind of consolidate the shoebox this year. So, because that's, it's a great point, because, I don't know how you guys bill. Most CPAs, I'm assuming there's some sort of hourly billing with that, which is fine. But what we recommend oftentimes is, like you just said, get your stuff prepared, have your QuickBooks, have your, whether it's Excel or whatever. The more that you can do to prep this properly to go to the CPA, it's less research work that they've got to do, and they can just focus on, what the next steps look like.
Right, because we're not asking you to categorize your expenses like you would on a tax return, just a summary of your basic expenses, and we don't need detail. But you're right, we charge by the hour, but once we sit down and talk to the client, if they would prefer a fixed fee, once we're able to work with them for a little bit and get an idea of what they will be providing, we can come up with a fixed fee.
Yeah, great. Talk a little bit about, again, kind of the same track here, how a business owner should be looking at the difference between their budget and their financials and the stuff we're talking about in terms of kind of day-to-day watching their expenses and their revenue and their operations versus just, looking at their tax return. We have a profit, we don't have a profit, taxable income, we owe, we don't owe. I mean, I know what the difference is, but I mean, how would you kind of recommend somebody kind of reconcile that in their mind, the difference between the two pieces?
Right. You start a business for a reason. You want to be successful, and you have a product that you think, or a service that you think other people would be in need of. Right. And you, like I referenced the checkbook before, I still have clients that say, well, I just look at my checkbook, but that doesn't really tell you where you're spending the money and whether or not you're being profitable. And you want to be able to do that when you're running a business, because if you're not making any money with your business, other than just the cash in the door, you want to make sure that you're able to pay yourself. I have a lot of small business owners, when they start out, they say, we're profitable because I haven't paid myself. And you work hard for your business. So you want to be able to look back and see, what am I spending? What am I earning? And reward yourself for the hard work through a salary, so that you can take care of whatever expenses you have personally. But it's important to know where the money is going, and also what you owe people. A lot of times people just look at their checkbook, which shows you a history, but they don't look at what's called a balance sheet, which shows what you own and what you owe, typically. And those are important too, because hopefully you're not running the business just by however much cash you have. So you're able to anticipate expenses that are coming up and be comfortable in paying for those. And I know as a startup business, a lot of times that's hard because the cash flow and the expenses don't match. And so that's why budgeting is important, so that you can sit down and say, okay, I know that over the next 12 months, we're going to incur these expenses related to the business. Then you can build how much business do you need to bring in to cover those expenses.
That's a great point. And as you said that, we run into a lot of business owners. Again, they are in business because they have a passion about something, they want to do something, and they may be successfully doing what they need to do, but again, not understanding the money side of it. Your point about, the balance sheet, what you actually own, is important. I don't think a lot of people really understand that. Now, obviously, we're based at Columbus State Community College, so I'm going to say that my question really is, what would you recommend, especially earlier stage businesses? Do you have any places you kind of point to for people to start to get an understanding of these types of things. Obviously, like I say, we're at the college, you can certainly go take accounting classes at Columbus State, and we have small business management classes. But, short of that, I mean, I see a lot of people too. I had a gentleman that stopped in my office a couple days ago that was asking me about certification. It wasn't a tax issue or a financial issue. It was about certification. But a lot of the information he gathered was from YouTube. And you can find all kinds of stuff on YouTube, but that doesn't mean it's right. So, anything, your thoughts in terms of where people should just kind of to raise their own knowledge level. Obviously, we have some programs individually as an SBDC too, but what thoughts would you have there?
You're right, spot on. College classes will give you some insight. Actually, we direct people to the state of Ohio and the Small Business Development Center, because I think you guys have a great program there working with startups. Accountants can give you a lot of guidance, whether it's a certification or how do you even start. And a lot of that we don't charge. It's just giving advice. Let's go grab coffee and talk about whatever the questions are that you have. The other places, bankers are a good resource as well. They know a lot of people. They know a lot of what the business bankers know, a lot of what goes into the businesses. So you're going to want to work as a new small business owner. You really want to have this toolkit of professionals, accountants, bankers, attorneys, because if you're going to end up being a C Corp or S Corp, you need corporate documents. So you want this toolkit, bankers, attorneys, accountants, and honestly, it's nice if they all work together or at least know each other, so that you have an attorney maybe doing some planning with you on your business. You want to check on the tax side, and attorneys know a lot about taxes, but maybe the accountant can help steer you to what would be best in your situation.
Yeah, that's a great point, because when I do our startup workshop, I always talk about, structurally, there's two sides of that coin. There's kind of the legal side, and that's the protecting of the personal assets, et cetera. And then there's the tax side and the financial side of it. And I think a lot of times people get really wrapped up in I want to be an LLC because I got to protect this, without knowing anything else about the structure and how that could impact them going forward.
Right. Your comment about YouTube, I do want to reference that. YouTube has a lot of resources, but you have to be careful because sometimes those are not educated professionals and they may steer you in the wrong direction. I'll give you an example. We had a prospective client come in and they said, I saw a YouTube, or the other reference they made was to a podcast where the people said, I can add my kids to the payroll to get more of a deduction. And we said, are your kids working in the business? No, my child is only 1, but I'm going to put them on the payroll. And we said, that's not sound advice. So, I mean, it's fine to listen to podcasts and YouTube, but make sure it's a professional that's giving that advice, because it might not be, I'm not going to say legal, but it may not be the best advice for deductions, as an example.
Yeah. I mean, I know, I recall, there's some car dealerships that the owner had kids and the kids worked in the dealership. They actually worked in the dealership. The 1-year-old is probably not going to be horribly productive. Maybe if they're using them in the commercials, I don't know.
That's what I was going to say. It might be good in a commercial, but I don't think they could, in your example, sell a car.
Yeah. Chaz, are you still on here? I have a question for you. Let's see if we can jump back on here. Hey, Chaz, do you want to talk a little bit about, I know that the deck has an opportunity for, individuals, deck tenants, partners to have interactions with the deck partners. So like with HBK and some of the other folks, do you want to kind of touch on that real quick?
Sure. HBK is still listed on our website as well as legal and marketing as options for folks to be able to sign up and get, some preliminary one-on-one advice. And so they can log on to our website and be able to, request that.
Okay. So I mean, there are opportunities, and again, this is other benefits of being involved with the community. And I know that this is something that in 2023 we want to get a little bit more active in, because I mean, this was pretty robust again, but again, the pandemic kind of crashed a lot of stuff, so we've got to rebuild a little bit. So definitely something that we want to do and provide these types of services going forward. So let's kind of go to this point. So we've talked about a couple of errors and mistakes and stuff like that. I mean, what other kind of errors, mistakes on the financial side do you see owners making? And again, it's probably just due to lack of knowledge on the financial side.
On the financial side, I think it's important, if you are going to use an outside or someone to do the bookkeeping for your business, you want to make sure that it's someone knowledgeable in the industry where you are, because there is different accounting for each industry. And
Right.
Some of it's straightforward. I mean, yes, revenues are revenue and expenses are expenses, but there are some differences depending on the industry. So you want to make sure that whether you're doing it yourself or you hire someone, a bookkeeper, to do it. And bookkeepers are great because they are good at keeping the data clear and in the right places. But again, they need to know your industry to be able to do that in a efficient manner. And that, again, is going to save you at the end of the year time. The other thing you want to do is make sure that you have the right formation. When I say formation, are you choosing to, if you're going to run the business by yourself, you can be the business can be an LLC. If it's a single member, understanding how those formations impact the taxation is very important. And I don't know if it's okay to go that direction, Michael, but
Sure.
So a single member LLC is really going to run just through your personal tax return, because it's just you, and you're still able to choose in an LLC whether you're taxed as a C or an S corp. But a single member goes through your 1040 for tax reporting purposes. So you just have to think about whatever you're earning there is going to be taxed at your individual tax rate. And it could have the impact of bumping you up to a higher rate than you're typically used to if you were previously a W-2 wage earner. You have an S corp, which is a flow-through entity. S corps can have multiple owners up to 100, and they all have to be US citizens. So an 1120S is prepared for an S corp, and then K1s are issued to the owners for that. And those are then reported on your individual tax returns. So again, the corporation in an S corp does not pay the tax. It flows through to the individuals. Then a C corp, there's no restriction on the owner's number or whether or not they're US citizens. The C corp pays their own taxes. And the only drawback there is it's at the corporate rate, but any dividends that are paid are passed on to the owners, and then that's taxed at the individual. So there's almost a double taxation with the C corp. So that's why you want to make sure that you get it right from the start.
Yeah, no, that's great. So let's talk a little bit more about, kind of go into that, because you talked about, the S corp, and I've seen a number of individuals. They start out as an LLC, and a couple of years later, things are going good. You're starting to make some money. You reach a certain threshold of revenue, and then there's this conversation about shifting to an S corp? I mean, what are your thoughts in terms of that? And as it relates to the S corp, should somebody, if they're an LLC, they see a path to revenue, which they all do, but I mean, should you just hit that at the beginning, or should you kind of wait, or what are your thoughts there?
I would say based on your goals. So
Okay.
if you want to grow the business and add partners, the other option is partnership. But you want to set it up right from the beginning. The only thing is tax laws change. And about 3 years ago, where everybody was forming as an S corp because that was most beneficial, they changed some of the C corp rules. And so what we did with our clients is went through to determine whether or not S or C was correct. You can change between S corp, C corp, partnership, LLC, but there's a period of time you have to wait when you make that election. If you change, you have to wait at least 5 years to make a change again. But really, you want to sit down with an advisor to determine from a tax standpoint what's best for you. I mean, and like I said, there's benefits for each, but one thing to think about on an S corp, you are able to take distributions of the earnings. Those distributions of the earnings are not taxed, but there are rules around how much you can take out of the company without it becoming taxable. There's a thing called basis, which I won't get into, but if you draw it down below the basis, then it's taxable.
Okay.
So, and then the owners or shareholders are taxed on it.
So I think that's interesting because, one, I want to kind of take a quick step back. You talk about the CPA and being knowledgeable in the business part of it. You know, there's a variety of different roles that individuals that have a certified public accountant designation that have sat for the test and gotten the certification do. So my wife is a CPA, and she has been working as in an organization as the CFO for a nonprofit company. If you have a nonprofit and you need some advice, she's an excellent person to do that. Beyond doing our personal taxes, I don't think she would want to get involved with it. And I think that's important for a lot of business owners, because again, maybe they know somebody who is a CPA and works for, whatever, just pick Nationwide or whatever. They can be very good at what they do for Nationwide, but that doesn't mean they know what you're doing there. So to your point, really trying to identify, somebody that understands and knows the important things. And to that point, I think it's what the business owner needs to be doing as they're looking for a CPA. They need to kind of go interview some CPAs and make sure that there's a fit that you can work with. You said, if you were recommending, I mean, what should somebody be asking a CPA to determine if they, in fact, would fit with them, other than just whether they jive together?
What you're right. The personality fit is important, and it needs to be someone you feel like you can work with, but you also need to be asking them about their experience in your industry, experience with your type of business, because that's critical in my mind. To your example, CPAs can be in what we call industry, or in the profession, public practice. And so you're right. I mean, people in industry are just as knowledgeable as people in public practice, but they may not know your type of business. So you want to ask them if they have experience. And sometimes you may even need to ask them for referrals. Can I talk to some of your current clients that are in my same industry? Just to get an idea of their experience with you. But personality is a fit, a comfort level is important. So I would really recommend Zoom is great, but if you're going to hire a new CPA, I would go talk to them in person if you can. Now, if you're in a different state, because in our case, we do have clients that are in different states. I have a couple clients in Colorado, so we do everything by video conference. But you have to build that trust. And I know that people hate to say go with your gut, but if you're interviewing a CPA and you're not feeling comfortable, don't choose them.
Right.
They may be a great CPA, they may be very knowledgeable, but if it just doesn't feel right, don't do it.
Right, right. And I think there's a lot to be said to that point, because it's, you have to deal with them, you have to trust them, you have to be willing to share what you need to share with them.
Right.
And if there is some level of trust that you can't cross, then that's definitely an issue that would be important to deal with.
Right. Because your business is kind of like your baby in a way.
Yeah.
I mean, you've started it and you're growing it, and it's something very important to you. And you want to feel like whoever you're working with, it's just as important to them. And that's why that interview and their experience is extremely important when you're choosing a
Right.
CPA.
Absolutely. So I have a question here. So when we you mentioned, connecting with bankers, and that you guys have connection with bankers, and obviously we do, and things of that nature. How do you counsel people? So I'm a business owner, I'm kind of doing okay. Their CPA is looking to help them reduce their tax liability, but then that sometimes has a detrimental effect when they're trying to get funding down the road. I mean, what is your recommendation as it relates to that? And if somebody has done that, I know that there's kind of ways to get around it if the bank will do it, because you can then provide some info to them to show them where it is outside of the tax return. But banks are pretty, this is the way we do it, this is what we look at. And if you stray too far from that, it causes an issue. So what thoughts do you have there?
Right. Getting your CPA or accountant and your banker together to go over the covenants. If you have small business lending, there's usually covenants in there, and you want them to review those together to make sure that make sure your CPA is aware of the covenants if they're giving you tax advice. And that way they can calculate whether or not it's going to cause you to go outside your debt covenants. And usually when you do, the language in your debt says it's going to be called. A lot of bankers will work with you unless it's been a consistent issue, but work with your bankers, and sometimes they will give you what's called a waiver of that. And then you come back with remedial steps that you're going to take to not come up against that issue in 6 months, a year, whatever the time frame is that the bank sets. But it's important for your bankers and CPAs to work together on those covenants, because a lot of times companies that are growing get debt, and then they have these covenants they may not even know. I've worked with companies before that said, I didn't even know I had covenants. And after we read the loan document, we do the calculation, they're outside of it. So most bankers will work with you, like I said, unless it's been a consistent issue.
No, that's a good point. Can you share, let's stay on that point. Can you share a little bit more? What are some potential covenants so the folks have an understanding of what you're saying?
So a lot of times, one, if it's an S corp, distributions, usually debt covenants, depending on the level of debt, limit the amount of distributions that owners can take out of the company.
Okay.
And so you want to make sure that you're not exceeding that. But also when you're working with your banker on the initial loan, that what they're allowing is enough for you to pay your individual expenses. That's one. Another one is debt to equity ratio. If you're a newer business, you're not going to have a lot of equity or carry forward of income from prior years. So you want to make sure that the debt to equity ratio isn't so far apart that if your equity is not very high and you get a lot of debt, the bank approves you for a lot of debt, then you're still able to meet those covenants. So
Mhm.
debt to equity, current assets, current ratio is another one where looking at the assets compared to the current liabilities. And it's really all based on, and assets are what you own and liabilities are what you owe. But that's usually where we see it outside of the covenants, is when the debt gets so high and maybe the company's not making a lot of profit to go back into the equity, then that's where we see the mismatch and going outside the covenants. Some
You know,
things also build in, if you're a business that's going to be acquiring fixed assets, computers, equipment, furniture, office buildings, usually you want to they usually have in the debt agreements that you have to get their approval over a certain dollar amount for that.
no, those are great points, because I think a lot of times, especially early on, you know, the owner say, hey, I need X, Y, and Z, and they put the plan together and they do this, that, and the other, but then they don't really understand what's in the paperwork in the back.
Mhm.
And then they have an annual meeting with the banker. You know, banker wants to bring them in. Let's look at your financial performance, stuff like that. And then all of a sudden there's issues, and it's because of the exact thing you're talking about there. So those are great points, and I appreciate that. So let's take a few minutes here. See if you have any thoughts. Have you seen any potential tax changes for 2023 that people need to be aware of, that
Mhm.
you can start thinking about now or start preparing for now?
Yes, I have. There were some changes put into place at the end of last year that affect 2023. And then who knows where we're going to go as the government, the House and the Senate change. There are always more tax law changes, which is another reason to have a CPA on your, in your toolkit, because they stay up on those laws. But some of the ones that are coming up are one that already has gone into effect. During the Tax Cuts and Jobs Act, they allowed for 100% depreciation on any fixed asset purchases. It's usually called bonus depreciation. That Tax Cut and Jobs Act set a limit starting in 2023. It's no longer 100%. It's 80%. And there's a 20% decrease in the amount that's allowed every year until 2027, when there's zero bonus depreciation. So that's the biggest one affecting companies, because that permitted companies to go out and buy equipment. If they were a heavy vehicle user, they were able to buy vehicles of certain types and write them all off for tax purposes. So that was a really nice credit, or part of the Tax Act that allowed companies to take a big deduction, which is going away. The other thing is research and development. There are certain companies and costs that qualify for a research and development credit. In the past, you were able to take that deduction or credit all at one time. Starting in 2023, you now have to amortize that over a period of time instead of a one-time deduction. So those are two of the biggest changes from a business side.
Right.
On the individual side, and we don't know what else Congress is gonna come up with for taxes, but those are the two biggest ones right now impacting businesses. And then on the individual side, standard deduction was increased in 2022, though, and I don't know how many people have already filed their tax returns because we're so early in January. But in 2022, a change that was made is if you use the standard deduction, you can't deduct your charitable contributions. And that was new for 2022, not highly publicized. But 2021, you could use the standard deduction and still deduct your charitable contributions. But 2022, you can't, which means you'd have to itemize. And the standard deduction is high enough that you may not have enough itemized deductions to exceed the standard deduction. 2022 standard deduction was $12,950 or is $12,950. 2023, it's $13,850. Another item is the marginal tax rates. They remain 37% for individual taxpayers, and the lowest is 10%. But the thresholds to reach those have changed a little bit. Health savings accounts, you can contribute up to $3,650 as an individual or $7,000 as a family. That's higher than it was in 2022. Let's see, long-term capital gains rates stayed the same, 0, 15, 20. But the thresholds to reach those have changed. So 15%, 0 to 44,625, there's no tax on long-term capital gains. But after 44,626 and up to 492,000, you're taxed on it at 15%. And then anything above that is taxed at the 20% rate, or 20% rate. Another limit that was increased was Roth income was increased. So you can contribute to a Roth IRA. AGI phase out is at 138. So if you make more than 138,000 of adjusted gross income, that starts phasing out and is completely phased out after 153,000 for single taxpayers. The only other change, which was for 2022, was there were changes to the required minimum distribution age. It used to always be 72.5. Now it's 73, and there's a 10-year window. So you can take those distributions over that time period or change the minimum distributions. You have some options.
Yeah. You know, it's interesting as you went through that, you know, a lot of times, you know, you watch the news or you watch this and they're talking about, okay, this is happening, but they don't talk about what leads to that. You know, they may say, okay, this has changed, but like you said, you know, yeah, but all of the stuff underneath it is adjusted too. Right. So you don't hear about that.
No,
that's
exactly. Yep.
Yeah. So that's cool. So Chaz, there you go. You got your depreciation question answered. I don't know. Get you fixed up there. Bruce, before we go any farther, hopefully Bruce Walters from our team is there. Bruce is in the middle of a construction and moving zone down in at Columbus State. So hopefully he's still around. And I didn't know if you wanted to mention, we've got a new program starting in February called, I believe, Entrepreneurial Spotlight. Bruce, are you still available?
I am, yep, still here.
Right.
Yes, that will be on, let me check my calendar here, February 9th, I believe. Yes, from 12:30 to 1:30. We'll be doing this, a new series, as Mike said, we'll be doing on a monthly basis. And each month we'll spotlight one of our successful small business clients. Our expectation is that they'll be able to provide some insight into their industries and the process of starting a business so that other clients can be successful as well. We'll do that, I believe it's the second Thursday of every month. So if you have information on that, reach out to me, and I will also drop a link to our calendar of events in the chat box. Our first guest is Destiny Layton of Lux Cleaning Company in Dublin, and we're really excited to have a chance to talk with her.
Yeah, I'm looking forward to this. This is something that we wanted to do. We've had the small business breakthroughs for about a year, almost a year and a half, and it's been successful. I think a lot of people like this, but I wanted the opportunity for us to focus in and kind of have the entrepreneurs share some of their experience and some of their journeys. So that's what we're doing here. I think that'll be a interesting piece. And like I said, if you check out our website, check out the calendar events, the dates are already on there, and we'll start adding new information as we get individuals going from there. So definitely something that we're excited about. I think that'll be really cool. So I have one more question, And Michelle, I didn't tell you about this one, so we're gonna have to work on the fly here, but
Okay.
hopefully it's not too big a deal. So the question I always kind of been with for individuals here. So the people that are on here today, or as they watch the video, I like to give them kind of an action assignment, for lack of a better word. I mean, what would you say as it relates to understanding your business and figuring out what you're doing? What's one thing that you could recommend that somebody do, maybe by the end of the day today, or by the end of the week? I mean, I guess that's tomorrow. I mean, some of that they should, kind of take a look at that could help them really get an idea of where they are.
Look at your business and ask yourself, can I tell whether I am making money, not making money? And if I'm not making money, am I able to determine what I need to do differently, action plan wise, to be profitable? Is it just because I'm so early in my startup? Or do I need to really look at the expenses I'm incurring and the way I'm operating my business?
Yeah, absolutely. And, I think that's great. Can you tell if you're making money? Can you legitimately tell if you're making money? It's more that I have money in the account or whatever. I mean, you've got to look at the whole gamut of what's going on. And do you have a system set up such that you can do that? And I think that's really important. And I also think it's important that for the business, that depending on how you've structured it, I mean, take a look at your cash flow and what kind of business you have. Cash flow is really important. I mean, I've seen a lot of businesses that are growing really fast, and it looks like they're doing great, and they are doing well, but they end up flaming out because they don't have the cash flow to support. And I think that's really important. I remember this has probably been back in mid 2000s or something like that. I don't know if they still have it. Business First had a award, the Fast 50, the fastest growing companies. And for a period of 3 or 4 years, the company that was first on that list was out of business the next year. And it was because of that issue.
Right. Cash flow is critical.
Yeah.
You need to be able to finance your company.
Absolutely. So yeah, I would encourage you as a small business owner, I mean, take a look at what you got going on financially. And if you really have a good understanding of the impact of the financials and the impact of what you're doing, and how that really translates to your business. And Michelle, you had a great point earlier. I think we do see people that want to say, hey, we're making money, but yet I'm not paying myself. Well, if you can't say that you're making money and you are paying yourself, then you're really not making money. I mean, I get that the business has to grow and the business has to do things, but as an entrepreneur, and an owner, I mean, we're doing this because this is something we want to do, but it is to be able to continue to do that, you've got to be able to live and survive. So I think that's a great point to take a look at. So before we wrap, Michelle, any final comments?
I would say, if you aren't able to look at your business and say, I know what I'm doing and how my business is performing, then commit now to setting up an accounting of your business.
Absolutely. Michelle, where can people find you and get a hold of you? One of the folks in the chat wants to know your contact info.
Certainly. You can call me at our HBK Columbus office at 614-228-4000, or go to hbkcpa.com and look at, you can search for my name, Michelle Roseberry, on there, and that will give you my contact information as well.
Great. Well, I appreciate you being here. I think this has been great. We've wanted to have somebody to come on and talk about some of the financial stuff, and don't be surprised if I don't call you next year at this time to come on too. But again, thank you very much. This has been great. We appreciate everything that you and your organization's doing. And Chaz, again, thank you, and Susie for all the work that you do here at the deck and supporting entrepreneurs and small businesses. We are, truly blessed to be able to work with you guys. So I want to thank everybody that's been there. It's here tonight. All the folks that are on here, Nikki, I want you to say hello to your cat. We saw her walking across the screen. So other than that, we will see you next month at the next Small Business Breakthroughs. Thank you.